All right, today I'm going to be talking about mergers and acquisitions. Super dry topic, but I'll explain how I usually arrive at this phrase that makes no sense to people. So when I say things over and over, that we have a criminally negligent FTC, and that makes any kind of market style competition in the US economy problematic, but then furthermore complicates the United States position overseas, and that both Wall Street is committing willful fraud to defraud the legal system to avoid antitrust violation, and on the other hand, you have willful fraud by the FTC. What the hell do I mean? So in this video, I'm going to talk about all of those different angles. And so to give a background, I'm actually surprised that when I looked at the statistics for mergers and acquisitions, if we look at what the stats are worldwide, and for instance, and again, I don't even know if these numbers correspond to what I would have expected, but what we see is worldwide in the year 2021, there's about 57,000 deals in terms of volume, and the total value of the mergers and acquisitions market is about 5 trillion. And so in the United States, we have almost half of the merger acquisition deals flow is occurring in the United States, with about 25,000 mergers and acquisitions with a value of about 3.5 trillion. And so the US GDP itself is only about 15 trillion. So this is almost a fifth of the economy, in terms of transaction, and those are two separate numbers. So GDP wouldn't be measured in terms of transaction value. But you often do have commentators like Carl Icahn, who is a notable, known as the corporate raider of Wall Street, making commentaries, that these people on Wall Street are simply doing financial engineering to bring the stock price up and to hit these like overly aggressive, unrealistic stock price growth targets. So like a lot of people have been looking at the stock market and identified, it seems like the recession cycle happens every 8 years, and why has the stock market continued to go up and up? Is this type of thing sustainable? And, I don't really know the answer to that. But what I do know from my own space is that sometimes it seems like when people say, is this sustainable? Surely it will, what goes up must come down. The answer is that when you have people who are actively trying to engineer the rules of the game, and then you have, let's say, the referee and the player cooperating together in a way that may be, legal in terms of the text of the law, but probably like morally wrong, or let's say if we take the spirit of the law, they're actively committing some kind of a fraud, then we can look at that context and say, no, they've actually just figured out a way to make the stock value always go up. And we see this in corrupt regimes. We don't expect it in a place like the United States, but here we are. And so to look at what the merger and acquisition does, usually a company is going to justify, that doing the merger and acquisition is going to allow the companies to create a better consumer offering. But to that argument, what we end up seeing is that Apple as a company maybe hasn't done anything very innovative for the last 5 years. They've introduced incremental updates, just enough to justify a new iPhone year and a model release. In fact, they've been hit with lawsuits that they have illegally or against regulations manufactured a loss of performance into the iPhone by rolling out software-based updates. So it had nothing to do with the hardware. And so planned obsolescence, they came into the news and under scrutiny for doing this planned obsolescence. So in fact, we could argue that the monopolistic tendency that mergers and acquisitions can have hurts the consumer, because then the monopoly itself tends to only be interested in incremental updates in order to preserve the market. And my experience with the big tech companies is that most of these companies will actually harbor a lot of R&D behind the scenes, and they'll only drip out a slow amount to the market over time in order to reap, either the bare minimum to release the next year's iPhone. You could extrapolate that as an example to all of the industry, or what they'll do is they'll have a decision that they make where, let's say, the best example I like is when Amazon had come out with Alexa. Alexa had been in development, as far as I know, since probably as far back as 2010. And this was like a very highly protected project at Amazon. And then as soon as they had released Alexa, it seemed like almost out of nowhere, Google had released its Google Home. And we see this happening again with ChatGPT. And now Google's trying to release its own version called Bard. And so the question is like, where did they come up with this R&D? And the answer usually is that these companies that are these big monopolies, again, going to that argument of like, does the merger and acquisition help the consumer or not? And then the answer being that the companies usually just are releasing incremental stuff, just to justify the bare minimum of buzz, to continue reaping revenue. And then on the other side, the anti-competitive side, is that they're all sitting on about a lot of R&D that they don't bring to the public, because that's against their incentives. And what they do is, in the case of when Alexa came out, Google is saying, like, do we have enough to create a competing product in this market, if only to disrupt and create noise in the market so that Amazon can't run with it on their own. And so if, in this case, like Google may have had the R&D on hand, but if they don't, if they can't build it within a year, what they're going to do is they're going to make an acquisition. And what's unfortunate is that you have these like really crazy cases of like when Amazon acquired Whole Foods, and it's like, I think justifiably under law, these companies are supposed to have a reasonable cause to acquire a company. And I think the only reason that Amazon would have come close to acquiring Whole Foods or having a reason for it was because they had this offering called Amazon Fresh, which was like them trying to operate a cashless or like a cashierless grocery store where you just like tap your phone, all the groceries are QR coded or so on, and you walk out of the store. But beyond that, like it was a super tenuous idea, and it's this idea that under that basis, like a company could almost invent any reason to acquire a company. And so we can look at it from the model of like stock price growth, and we could say like what happens under that model, because what happens is I believe if you take again someone like Carl Icahn's remarks, and if the acquisition allows for the stock to be boosted up because they're absorbing another company at a discount, and the stock price is traded at a future speculation, and they're kind of betting on this idea that you have the combined value of both companies now working in tandem. So you can, in theory, create, more consolidated offerings, or you also are removing competition from the market. So both of these things bode well to the stock price. On the consumer side, and we'll go back to that point in a second about the stock price growth and the Wall Street side. And on the consumer side, I'm sort of making the point that really all it's doing is it's incentivizing monopolistic strategy, which is either to deliver the bare minimum to consumers in terms of incremental updates, or what they're doing is they're rolling out or their new products only when they have to compete, or they're acquiring in order to take competition out of the marketplace or to compete with an existing competitor. So what happens as well on the stock price side is that at some point you run out of merger and acquisition targets. And so we can sort of see this, the place that this has been in the news is with, let's see if I can pull this up. So there's this proposed acquisition of Activision Blizzard by Microsoft. And this was a pretty crazy story because Activision had already acquired Blizzard, which was a huge company. And now, as though that's not good enough, now it's a discussion of Microsoft acquiring Activision Blizzard. And the scandal is that Activision went through a really massive sexual harassment issue where someone at the company had killed themselves in regard, probably search the word suicide here, kill. Someone at the company had committed suicide as a result of misconduct. And so, you can kind of see it with the fostering of frat boy culture. So then not to create causality, the next news announcement was that Microsoft was now interested to buy Activision, presumably at a discount. And then the stock price went back up on both accounts. So another example would be you have these rumors of Disney being acquired by Apple, which has been floated like periodically. But again, this is after Disney had already acquired Lucasfilm. And so there's already these sort of consolidations in the market. And so I was a bit surprised when I looked at these aggregate statistics for M&A, and we can also see a clear growth in mergers and acquisitions, which I think is a strong signal of economic deterioration, which I'll get to in a moment. But what I would expect to see in a chart like this is that if we have this pattern that Disney's acquiring Lucasfilm, and then Disney Lucasfilm is being acquired by Apple, I would almost expect to see that there's some kind of growth in deal size, but I guess because in other words the total market cap of acquisition becomes much larger, or it would do something to the amount of deals that are occurring. But I'm not too sure. It could be somewhere in the numbers. There might be different charts to be trying to look at for this to gain an idea of is this creating economic value overall or not. Certainly we can see a growth in the charts, but beyond that, I was really looking for something in the numbers to indicate some kind of compounded amount of deal flow size in mergers and acquisitions to reflect. I think what I was looking for really was is there a Ponzi scheme type effect present? But I think that it probably gets so complex that it's hard to fully break down. I mean, you definitely could look at the fact that in 2015, the value was trading above the number of volume of acquisitions, whereas it seemed like in prior years it had maybe traded around half of the volume. So I'm not really too sure what good information to pull out of that, but again, I think we can clearly see that the trend line goes up. So what happens is that once you have this market consolidation into just a handful of very large companies, the news being that Apple hit $1 trillion in market capitalization, is that there's really no competition left in the United States. And in fact, most of the ability to enter into market requires some form of capital. And then as soon as you have any kind of institutional capital financing any endeavor, there's a strong onus to create an acquisition. And then the saying goes for anybody that's trying to start a company is that you have to hit at least $20 million in acquisition before you see any kind of return for your own efforts and your own share price, even if you started the company. So that's a pretty huge number. And it also, in order to hit that number, you can't really build that type of number without an acquisition. And so there's something that just intuitively there feels very false. And what ends up happening is that once the founder does create an acquisition, then they usually get a contract for about 3 years to stay on with the company, and they are not allowed to cash out their shares until the end of that contract. They would have to really mess up badly in order to break the contract, and there'd probably be contingencies about liquidating. So that's typically for the executive level. And then, you'll typically have in these scenarios, middle management, might have some shares that they're also hanging on to. And what I've seen, from my consulting experience is, anytime there's an acquisition or merger and acquisition, you might have this top level financial wizardry that fulfills the books. But the line level at the middle management is that, not only is the founder motivated to sell because that's how they make their return, the financiers are trying to hit their return. But if you're the middle manager, and you're still at the top of the pile of the working class, you become checked out, and you're only that company to see, maybe you might leave if you got a much better offer because maybe it's not a very compelling amount of money. But what happens is you have people that remain for maybe a period of 3 years just so they can cash out and then they quit. And in some cases in a merger and acquisition, you have headcount cut. That tends to happen more on the late stage capital and private equity, is that they take a fine operation and they just cut headcount in order to reduce cost and to remove the growth element from the company. But you tend to have this element where there's large knowledge gaps, there's a loss of motivation, everything has kind of become more about money. There's this idea that the founders have no longer believe in the vision of the company, so they're going to sell out to some bigger entity that's really not going to solve issues. It's going to create more issues. And many times in my consulting work, we would come into these acquiring companies and help them with an acquisition to try to integrate the two pieces. But the idea is that it generally, or the statement that I would make is that it creates a kind of a rot. In other words, there's a loss of motivation because there's a sort of a relinquishing of control to a larger entity that often has even less of an idea or opinion of what to do with the technology or the company that they're acquiring. So not only do you have at the, let's say, the micro scale, if you're trying to enter into the market, very hard if it's monopolistic. You can't really do much innovative without capital. The capital systems are incentivizing you to do an acquisition, so you're basically playing in the ecosystem of the big dog. And then once the acquisition occurs, you're having a rot of middle management, and you're having, you're just kind of kicking the company out to the pasture. For it to, maybe it still continues to function, but largely speaking, it creates a kind of a cycle of, we could look at it and say like organizational death, but we could also look at it from that lens of, why does a company acquire in the first place? And often it's to remove competition from the table, and it's also to boost the stock price temporarily. And ultimately, maybe they're trying to do something bona fide with the acquisition to compete in the market themselves. But the incentive structure of a big monopoly is not to create new offerings in the market. They are specifically trying to reap the most amount of money possible with the least amount of work, which often means the big company is trying to just have on hand innovation that it doesn't release to the market unless necessary. And necessary in this case would mean only to compete, or to trickle out, the bare minimum updates to create consumer buy-in. And in some cases, the companies have been accused or have done wrongdoing in creating planned obsolescence. In other words, forcing the consumer into one model or another. And of course, this area gets super complicated. There's a ton of other angles to look at. But I think where I would go next from there is that what happens is that in the Wall Street picture, the merger and acquisition, just like any drug-addicted system, or to use the metaphor of a drug addict, very similarly, this creates an addiction-like environment, and sooner or later, acquisitions become not really enough to sustain future growth. And so what they do is not only have they removed the competition domestically, they've created rot in the middle management. They've made it very hard for newcomers to compete, and so now they go international. And there's been so many stories of like Google changing its search product to create censorship with the Chinese government, or Apple doing the bulk of its manufacturing in China, to the point that now there's all these foreign policy repercussions of trying to re-onshore the microchip fabrication in Taiwan, which literally has been cited as the main cause of why the U.S. maintains a presence in the South China Sea. Various news blips of close encounters that could uptick the war risk, which is just awful. But the reason that these companies are doing that is because Wall Street is advising them that if you're able to enter into, let's say, the Chinese market, the Indian market, that means you're able to grow the addressable size of your market 2, 3, 4, 5 times. And that means that the stock price itself could then grow by that same amount because you're presumably increasing revenue. So this is kind of a pretty hairy topic. There's a lot of different areas to unwind, but I wanted to kind of touch on all the different ways that mergers and acquisitions can hurt the economy. I have no idea what the hell the FTC is doing. It doesn't seem like they're doing their jobs. Every month or year that goes by, I feel like I'm reading about more and more absurd and ridiculous merger and acquisitions. And there's a whole lot of other things outside of just the basic bare bones of big companies acquiring smaller companies that create anti-competitive behavior. But the net effect is that whereas this is creating short-term gains in maybe the stock market, it's creating long-term rot because the merger and acquisition itself and the monopoly is not enough, as though that wasn't bad enough as is, but it creates a kind of a new onus for those same companies to go global in order to continue the growth. So what they're doing is they're creating a short-term stock price gain and at a cost to domestic well-being and competition, and then they're going international, meaning that they've conquered the U.S. markets. They're completely not even caring anymore what happens in the U.S. market. So like the only thing that might tie them to the U.S. markets would be that they live in the U.S. or that they feel some sense of like moral duty, but that's always going to get a lower priority than fulfilling the legal obligations to shareholders. So it's a very screwed up system, and it's why it's a topic that I can get pretty heated about, but I wanted to create information about why and what's under the surface of this space. And it's this idea that we're reliant more and more on mergers and acquisitions and it's a vertically integrated pattern, unfortunately, and we've gotten too far from creating nuts and bolt economics to drive things. And so whether it's this topic or other topics, I'm just going to keep bringing it, and just subscribe if you want to see more, and I will take that as an indication to make more and better content. Till next time.